All right, you guys. So today I am going over the three best ways of finding discounted deals. Um, basically, this is a marketing class on how to find deals, how to look for deals, that kind of thing. And I started with this slide because my team put this slide first, and I just couldn't stand looking at myself. So that's actually my AI clone. So I started with the other slide. Anyway, right now there are investors buying properties at deep discounts, and I want you to be able to do that as well. In Baltimore, investors are buying properties for between 20 and 50,000. Some investors are making, no, some investors are making that per deal. The question is, do you know where they're finding them? And so whether it's Baltimore or DC or Prince George's County, you just have to know where to find the deals. And then I think the other thing is not just finding the deals, knowing how to put the numbers together. I say this all the time, but investing in real estate is a math problem. You just got to get the math right. And if you can get the math down pat, you can find deals and make offers and make lots of offers. Also, I want you to know that every offer you make, you're not going to get. It's a numbers game. And so we've gone over the data, the statistics, the what we call the KPIs, the key performance indicators, to let you know how many offers you've got to make depending on the type of marketing that you're doing to get a deal. And so you just got to know that. And then you just have to be persistent. You just got to keep going and going until you find a deal. And then you've got to follow up. Like you've heard me say a million times that the fortune is in the follow up, but we just don't do that for some reason. And I think oftentimes we're in our head, we kind of talk ourselves out of deals, we talk ourselves out of making money. And so we've got to stop that. Like we've got to be persistent, focused, and we just got to keep going. But there's deals out here right now. A lot of our investors are finding deals, closing, meeting with lenders, all of that. Why most people miss these deals? Looking in the wrong places. So they're looking all over, but in the right place. Um, Only using Zillow and Redfin, don't understand off-market strategies. And so we'll talk about off-market strategies and on-market strategies. Don't know how to analyze the deals. And I think that's the biggest thing. And I would say in terms of analyzing the deal, there's a number of different tools at your um, disposal that you're not using. And so we've got to use um, everything that we have. And so now we have AI. And so let's use AI to help us analyze the deal. We on our Tuesday night call with my coaching students, we did a practice on comparing. We did a comparison of pulling comps on the MLS. We pulled comps on ChatGPT, and we pulled comps from PropStream. Same house, and basically within a few numbers, all the comps came out the same. Now, if you're when we're analyzing and pulling comps, if you're an agent, use the MLS. If you're not an agent, get PropStream. If you don't want to pay for PropStream, use Claude or ChatGPT. And we did a demonstration on that. I won't do it now, but we did it on Tuesday. And and the numbers, I mean, were perfect. And I think Keith, you were there. The ChatGPT was even more detailed than the MLS, than PropStream. It was more detailed. And so I want you guys to analyze these deals, but make sure that you're using technology to help you analyze the deal because oftentimes we're analyzing in the wrong way. Either our after repair value is too high or it's too low. Our repair cost is either too high or too low. And so we've just got to make sure we're analyzing and using the right numbers. All right. I'm going to go over three different ways, maybe four or five different ways to find discounted deals, how each strategy works, pros and cons of each, and which one gives you the biggest advantage. That's me. The three ways investors find deals. So I'm going to go over finding off-market deals. I'm going to go over tax foreclosures again. On market, I will go over MLS opportunities. All right, let's break down each one. Off-market deals, deals that are not listed publicly, found before ever hitting the market. And that's what we want. We want off-market deals. I want off-market deals as a priority because I do some type of marketing, be it cold calling, be it postcards, be it driving for dollars, whatever it is. Generally speaking, when I'm meeting with a seller, I'm like the only one meeting with her, or maybe me and somebody else. Versus on market, and I'll talk more about this in a minute when we go to the MLS, the whole world has access to that property. So there's a lot of competition. But since everybody knows that, a lot of people stay away from the MLS, which honestly makes the MLS, if you're an agent and have access to the MLS, a good alternative. All right, how investors find off-market deals. So let's talk about off-market deals. They go driving for dollars. And so you might say you don't have a budget to pay for marketing, at least initially. Then you just pick a targeted area, pick a zip code that the houses are older neighborhoods, anywhere in DC, anywhere in Baltimore, inside what I call inside the Beltway and Prince George's County. Those are all like 50 years or older. We want 50 years or older because we want properties that we can buy low and sell high. Let's just say Capitol Heights, Maryland. We're buying in Capitol Heights for about 200,000, and those houses are selling for 400, 450, 500,000. Um, East of the river in DC, where we got Deanwood, we've got Anacostia, we've got Congress Heights, we've got all those neighborhoods east of the river. We're buying for around the same 250, around 250. We're buying for, selling for 450, 500, depending on the square footage, and even above 500. Baltimore, depending on the zip code, we're buying for about 100,000, 130, 150,000, and ARVs are going up. They're up to like 250, 300, depending on the area, depending on the zip code. And so what area you pick, if you're going driving for dollars, then you want to write down addresses in those areas, houses that look to be vacant or abandoned. And I bring this up first because number one, it's cost effective. And then number two, we've had a lot of our investors have a lot of success with it. You write down the address, and then we come back and skip trace, get the phone numbers, and just make a simple phone call. I've got auctions here. I'll talk about tax foreclosure auctions because they're all coming up. Prince George's County is, it's either, I think it's Monday, it's the 11th, whenever the 11th is. Baltimore's the 18th. DC is in July. And so those opportunities are coming up, but there's a number of different auctions that are happening every day of the week. And again, it's the same thing. It's the same premise as driving for dollars. You pick an area, stay with that targeted area, that targeted zip code, find auction properties in that area, and then bid on those properties. Now, I want to make sure you want to make sure that you can get financing. And I know a lot of you guys are starting to talk to lenders. I'm starting to get a lot of questions with lenders. Supposed to be a lender on here. I don't see him. Um, but one thing I want you guys to do that are interested in buying is you need to start meeting with lenders. Get pre-approved. Just like you're going to go buy a house to live in, you get pre-approved first. As an investor, it's the same thing. Go get pre-approved so that you know your buying power. You know how much you can buy, what the mortgage payments are going to be, what you qualify for, all those kinds of things. How much cash you're going to need. And then know which auction properties. I mean, which auctions. And so we got alexcooper.com, we got Hubzu, we got auction.com, Ashland Auctions, um, HUD Home Store for the HUD foreclosures. I'm probably missing one or two, but those are the main auctions that you should be looking at. Um,
AJ Billick.
AJ Billig is one. AJ Billig's a good one. Baltimore. Absentee owners, you guys. An absentee owner is one that owns a property but doesn't live there. He's either rented it out or vacant or abandoned. I'm seeing a lot of absentee owners selling their properties for one reason or another. We talk about the three T's or the four T's, and it's pretty much for those reasons they're selling. So, what are the four T's? Somebody tell me what are the four T's? I used to say three T's, now I'm saying four T's. Somebody tell me what are the four T's? Give me one of them.
Tenants, turnover, termites,
Okay,
Taxes.
toilets.
toilets. Yep, those are the four T's. And for one of those reasons, they're selling. And they're selling, a lot of them are selling. We're starting to see a lot of them in landlord tenant court. They're selling. They're just tired. And then the economy is not helping. And so they want to get out and like tax foreclosures, which I'll talk about in a minute, they're selling for like pennies on the dollar. We're asking them, how much do you owe on the property? And we're making our offers according to that. Like, we're just going to get you out and buy it and buy it that low. And so you can find an absentee owner list on PropWire. That's free. PropStream. There's a number of different places that you can get an absentee owner list. Um, on PropWire, you can pull a list wherever your target area is, and it's free. You just if you want to skip trace and call them, you just got to pay for the skip trace, but they'll skip trace it for you. Pre-foreclosures is the same thing. You can get a list of pre-foreclosures on PropWire. That's free. You can mail to them. If you want to call them, then you've got to get that list skip trace. But there's a lot of people, unfortunately, in pre-foreclosure. Direct mail, postcards is just a great way. So you're going to take the same list that you're going to use for absentee owners and or pre-foreclosures and mail to them. So now you've got a marketing mix between direct mail and absentee owners, and or pre-foreclosures. The key is, you guys, you got to do something. Yes, there's opportunities out here that our community brings to you, but what if they don't? Like, what if we don't have anything? Most times we do, but which means you've got to put forth some effort as well. And then cold calling. All of this right here, you guys, I'm sorry, absentee owners, pre-foreclosures, direct mail, cold calling. All these are one and the same because the same list you pull for direct mail and the same list you pull as absentee owners and pre-foreclosures, you can call them as well. And if calling is not your thing, then hire a telemarketer to call for you. We have a telemarketer out of the Philippines, or um, create a AI caller for you that does outbound calling. You either create that yourself or have somebody create it. I've been talking to people this week on Upwork, and per AI agent or per GPT, it's about maybe $300 for a voice caller. And so you could hire someone to create a voice outbound caller for you or a cold caller for you, and it's $300-400. That's not a lot of money, and they will show you how to feed that caller a list, and that caller will make outbound calls for you. They can speak in your voice or any other voice that you want, and and then you can have what's called workflows. You can tell the AI agent what to do. They can put that person on your schedule. They can hand that person over to you, a live call over to you. Um, there's a number of different things that AI agent can do for you. It takes money to make money. If you don't want to call, calling is effective, but if you don't want to do that, either hire a live um, virtual assistant to call for you, as we do, or an AI agent like we're going to be doing. We're creating that now.
And what companies do you recommend for the AI voice calling?
Um, I don't. So if you were to go on to Upwork, let me just show you real quick. If you were to go on to Upwork, there's so many, so many. And so I have a job out here now. I think I may have closed the job. Open, active, upcoming, draft, paused. I I closed that job because I hired someone. Job posting proposals. Let's see. So I opened I posted this. This is the person I hired, but I posted this AI automation specialist is what I posted, and I reviewed 170 proposals, but there were many more than that. I had a short list of 29. I just kept whittling it down, and I finally hired Adnan. He's not going to start for 2 more weeks. But there's just so many. And then, and I'm paying him $7 an hour, but he's putting together a whole system for me over a 3 month period. Um, but this is what you do in Upwork, and there's a lot of companies. And then, or if you want to go to Fiverr, you can do the same thing. And then you just put in a job here in Fiverr. You just play with this AI automation. You can put that, and then it's like all these people, and they this person might. I will do AI agent automation. Let me just put something else. AI. Let me put something else. AI, let's see. AI voice agent. He's charging $90 for AI voice agent, this guy. Basic AI voice agent with fax answering, CRM integration, call logs, docs, and training. His basic package is $90 for $200 basic plus outbound confirmations, reschedules, and multilingual. That's huge. You can have an AI agent that speaks both English and Spanish. And then for $300 standard plus bulk power dialer. So you can feed you could so for $300 you can feed the voice agent. It's power dialers. You probably up to like 10,000, a list of 10,000 people. Objection. So you can give he will give the AI agent a knowledge base with your help, a knowledge base to deal with objections also, and custom voice cloning. So they can actually he will clone your voice and to give to the AI agent and for $300 and he can do all that. That's pretty cool, right? And so you can hire this person and I mean you get more bang for your buck with this person for $300, but he can give you a basic voice agent for $90 to answer your question. And they do everything. He can get your voice out of 11 labs. Yeah.
So is this $90 or $300 based on a month, or is it based on a number?
What do you mean by a number? It's a one
A
time.
number of calls.
No, it's a one-time fee. So for this, it's a one-time fee of $90. Unlimited calls, especially with the bulk power dialer. We have a bulk power dialer that we use, and we feed it like thousands of leads every day.
So how long do this $90 last?
It's a one-time fee of $90.
Forever?
Yeah, one-time fee. So,
Okay.
so I would look them up, but I would just go to, that's just him. I mean, there's plenty of them. I mean, we're in Fiverr, so not just him. She charges a little more. She's probably from the US. Build an AI agent. So you can get these AI agents, you guys. And these guys, I mean, they know AI. I mean, and then you look how many stars. He's level two. They're all kind of level two. He's 5 stars. They're all, so you want to pick somebody that's 5 stars.
Hey Greg, how do you handle your password for your already existing accounts? Do you have to give that to them?
Yeah, you do. You can always change it when they're done, but yeah, you do. They have to get in. What do you account for what? Like your CRM?
CRM, I'm thinking if I want them to attach a bot to my already existing platforms, like maybe Facebook or LinkedIn, do they have to have my passwords for those?
Yeah, you give them a temporary password, and then when the job is done, you can just change the password. hmm But they're not going to mess with anything. They don't want to see how everybody's got 5 stars. They don't want they're out of you can put them out of business. All these people here, you can put them out of business. The person on Upwork, I could put him out of business with the bad rating. And so if I was to go to see he's got 5 stars. But I could put let's say it was something that I didn't like. I could put in a bad review, give them no stars or 1 star, and this is going to come down. They don't want that. Especially he's in India. Most of these guys are in either India or Pakistan. And their livelihood is based on really getting great reviews. You guys with me? And so these guys really know this stuff. And so if you guys want to do this, I would go to either Upwork or Fiverr and just hire someone to do it. Like this is very, very, like this guy right here is very, very inexpensive. This is inexpensive. And then maybe what you do is you talk to this guy, just take the $90 package and just talk to him. and maybe he'll give you a little more than what comes in basic. Any other questions on this? And they can use your voice and everything. My team did my voice today in Spanish, and it was my voice speaking Spanish.
You referenced the bulk dollar. What about bulk dollar do you use?
Say that again?
I said earlier you referenced the bulk dialer, and I asked,
Oh,
which one do you use?
we use call tools. I was hoping somebody said that they wanted to hear me speak Spanish.
Yeah, that would be funny. Let's hear that.
That was me. I was thinking that.
Go ahead, do it.
Do we have time for that? All right, let me
Of
see.
course.
You guys want to hear me speak Spanish?
Absolutely.
Yes, please.
You guys didn't know I could speak Spanish?
You
No.
didn't either.
Huh?
I said you didn't either.
You didn't know I was bilingual?
Let's find out.
Fine.
Lugar. Pero si quieres construir riqueza real a través de bienes raíces, aquí es donde perteneces. Regístrate hoy y aprende más en joinbrs.com.
How was that?
You didn't know you could speak Spanish.
Huh?
You didn't know you could speak Spanish.
Un agente de bienes raíces que quiere más que solo comisiones, Bennett Realty Solutions fue creado para ti. En Bennett Realty Solutions ayudamos a los agentes no solo a vender propiedades, sino también a invertir en bienes raíces.
How does your mouth look like it's actually mouthing Spanish words and not you speaking in English and it translating it? How does it do that?
It's AI.
And so you're saying it in English, but when it comes out your mouth, it says it in Spanish, and your mouth looks like it's moving in the Spanish words.
Like I said, I want to get to, I just want to show you. So the one guy, him. So this, let's see. So you see this right here, 11 Labs?
Mm-hmm.
And so you can do it in 11 Labs. And so 11 Labs gives you the voice. And then you guys write this down. This stuff is important. So 11 Labs gives you the voice. They got 130 voices. I mean, 130 languages. And then HeyGen right here. Let's see if I can sign in. Am I on my account? I think so. Yeah. So HeyGen, you can create a AI clone. So these are some of my clones, some of my avatars. And so that
You just gave it a picture or you gave it a video?
picture. You just give it a picture and it brings it to life. Any picture. And then here comes Raul. Raul plays with this also. He's getting ready to come on. But these are some of my avatars.
And what was the other one you said that does the languages?
11 Labs.
11 Lab.
Go back to the PowerPoint. I don't want Raul thinking this is an AI course. Yeah, 11 Labs.
And that term is universal, 11 Labs.
No, 11labs.com. Well,
Okay.
I don't know if it's .com or not, but just Google 11 Labs. It could be .io or I don't know what it is.
And you saying LAB, right?
Yeah, let me just show you real quick. Raúl, ¿cómo está?
Mr. Greg.
It's 11 lab, yeah, IO. It's 11 labs dot IO. So they have about 130 different languages in here. So it's a free AI voice generator and voice agent platform.
I ain't getting on my. Mm.
That's pretty neat where AI is um how far AI has come, right? All right, let's get back to the program. But what's relevant about that is in terms of calling, you can now have an AI bot or AI agent make the calls for you. And as you can see, it's fairly inexpensive. And like HeyGen, 11 Labs, they've got free versions. You can get it and take just like ChatGPT has the free version. 11 Labs and HeyGen, they have a free version also. All right. The pros of finding off-market deals, less competition, higher profit potential because it's less competition, and negotiating power, which means you want to find off-market deals. Um, we can negotiate a lot better with off-market deals. Like I think Kenny is on here. He just, I don't know if, I don't, is Kenny on here? Let me see. Yeah, Kenny, did the guy sign the contract? Or I don't know. Let's see if Raul's still. Raul, you know, on Kenny's deal, did they sign his contract? Do you know Kenny? Raul?
No, yeah, no, they didn't. They haven't signed it.
But anyway, Kenny found a deal, and he's the only one negotiating with the seller. And we wrote the contract. And so that's an off-market deal. So you're just
Yeah,
negotiating, huh?
yeah, I'm here, Greg. I'm going to check with him. I thought he would have signed it by this evening, but he said all he needed was the that highlighted language in the contract taken out. But I'll call him in the morning because
Okay.
I'm ready to roll. So
Yeah,
yeah,
it's an off-market deal. You were the only ones negotiating with him. And so
right.
that's why we want off-market deals. Sometimes doing off-market deals can be time-consuming, requires marketing because you got to find the seller. And the biggest thing is requires follow-up. And so if you're not going to follow up, you guys don't market. Just wait on deals to come your way because it's the follow-up. The key to your whole marketing, the key is the follow-up. And again, I said it earlier, I'll say it again. The fortune is in the follow-up. You just got to keep following up. That's the key. You got to follow up. All right, MLS deals. So these are on-market deals. Properties listed by agents with hidden value waiting to be uncovered. And so on the MLS, if you are an agent, but even if you're not an agent, there's a number of different ways you can honestly, find these same properties. You can find these same properties that are on the MLS on Redfin. And there's other places too. Privy, you can find them on privy.com and some other places you can find MLS deals if you're not an agent. But you can find underpriced listings, properties that need work. We do a lot with days on the market. So if they've been on the market for 30 days or more, and there's been some price reductions, those are good opportunities for us. And then, of course, expired listings from the MLS. Those are all great opportunities. The pros for properties on the MLS, easy access. There's different financing options and transparent data. The cons are high competition because it's on the market. Even whether you have access to MLS or not, when a new listing goes on the MLS, it syndicates to about 50 or 60 different sites. Um, Redfin is one of the sites, um, Zillow, Realtor.com, Homes.com, Zapier. There's a lot of sites that you guys can see. everybody can see because it's on the market. So there's a lot of competition, lower margins, you're not going to make as much money, and harder to find great deals. But here's the secret. We all know that the best deals are off-market deals. We all know that. We all know that the margins are higher with off-market deals because you're not really competing with other people. And so everybody is scrambling to get off-market deals, and they should. But what that means is there's a lot of great properties for investors on the MLS that go neglected, and agents aren't looking for them. Sometimes there's properties, and we're finding them like in Southeast, and Valerie has found some in other places where the buyers don't want them. They're not even good for 203K renovation loans for owner-occupied buyers, but they're good for sellers and they're willing to negotiate. So we have closed some of those deals, but if you can get access, I would go ahead and do that. All right, tax auctions. And as I said, tax auction in PG County next week, tax auction in DC in July, Baltimore, May 18th. Go ahead, Charity.
I'm going to go back to what you were talking about when MLS and you talked about expired deals. What does that mean on the MLS? I've seen that and I don't know what to do with it.
So the question is, what does an expired listing mean?
Yeah, does it mean I see it, but it's no longer there? Is that what that means? I should just disregard it? What do I do with it?
No, it simply means that with every listing, there's a beginning date and an ending date. And let's say the ending date is today for a particular listing.
Oh.
And so it's going to expire. And so now tomorrow you're going to look at a listing that was active and now it is expired, which means the listing agent doesn't have access or is not under contract anymore with the seller. It has expired.
Oh, that contract has expired. Okay.
The listing agreement has expired,
Okay.
which also means that now they're fair game. Like even you as an agent can now go after that property. Whereas when it was listed with an agent, if you're an agent, you can't go after that property because they're already under contract with another agent. So now the listing is expired. And so now that owner has a couple options. They can relist with that current agent, or they can try to sell it themselves as a for sale by owner, of which a lot do. Just keep it off the market. As investors, we want to go after them. And so let's say we put in a zip code 212. What's your favorite zip code? 212 what?
No, I don't really have a favorite, but
Give me one.
let's put in 21244. Did you hear me?
Yeah. So in 21244, in the last 6 months, these properties have expired from the MLS,
Okay.
the Windsor Mill. And so,
Yes.
and so you just go down here, and now you can go after this one. Now the agent's out the way, so you don't need to worry about commission. Now you can go directly to the seller. So you can go after one. If it's on the market for 192, they may take 150, 160. This one is on the market for 199. This one, these might be condos. I don't know. So now they're all fair game now for you.
Okay. So I would then contact the homeowner.
You can contact the homeowner. Let's see. I'm gonna try to do this. I keep forgetting how to do it though. Let me see if I can figure it out. All right. So you've got 22 of them here. You're gonna select all. I think we come down here and say export. and then we hit this and we say public record. Is it public record export? I think it's public record export. I'm afraid to export it now. Then you hit export, and then it'll be a spreadsheet with their name and the address and a bunch of other information.
Mhm.
It's going to come to you in a CSV file. If you
Mhm.
want, you can then send it to a company like reiskip.com, and you can just email it to them, and then they'll send it back like within 5-10 minutes with the phone numbers. And
Okay.
now you can call all 22 of the people.
Okay. Thank you so much.
No problem. All right, tax foreclosure auctions. And so we're kind of talking about that because we're in the season, we're in the season for this. So I've been talking about this a lot. Tax foreclosure auctions work. Owner stops paying the taxes. Now, this generally happens when they own the properties free and clear. Properties have been a lot of people have inherited these properties, or they've been in the property for a long time and there's no mortgage on the property. And so we're actually going to go see some properties on Saturday where the owners have owned these properties. It's been in the families for years, passed down from generation to generation sometimes. And now the newest generation, they're not paying the taxes. Sometimes you just forget. Sometimes investors will have a loan on the property, but they pay the taxes and insurance themselves and they just forget. It's happened to me before. I just forgot. And then I got a letter and then I paid it. But sometimes properties have been in the families and they don't pay, they can't afford to pay. Sometimes you just let them go, but there's lots of opportunities. And I say it this way because oftentimes, and I said this before, if a homeowner is in pre-foreclosure, if they're not paying the taxes, if they're not paying the mortgage, they're not paying the taxes. And if you're with a bigger mortgage company, they're just going to they're going to pay the taxes, then foreclose. If you're with a hard money lender, of which we'll probably see some on Saturday, if you're with a hard money lender and you stop paying a hard money lender, you haven't paid the taxes, most times hard money lenders just going to let it go. They're going to write that off on their insurance. And so they're just going to let it go to the government auction right here. And so we see a high percentage of investors halfway through a renovation and they let it foreclose and then go to tax auction. And so properties go to tax auction. Investors can bid on the outstanding taxes. We want to bid higher because it is a competition so that we can win. There is a redemption period. For residential houses, it's actually 9 months. Especially in Baltimore, it's 9 months. For all the other type of properties, it is 6 months. And then if it goes through the redemption period, since it's a tax lien state, you can now foreclose on them and pay the balance between the taxes that was owed, which if you win the auction, you pay that. Let's say it's $2,000. You pay that at when you win, and then it's $2,000. Let's just say you bid 20,000, taxes were 2,000, you paid it 2,000 now, you pay the other 18,000 when you actually close on the deal, generally around a year or 2 years after the auction. Any questions on that, you guys? All right, why tax foreclosure auctions are so powerful? They're deeply discounted, less competition, and massive opportunity. And it is. It's a massive opportunity. And so here's an example of the numbers. Here's an example. This example calls for you to buy the property at 50%, make an offer to buy the taxes. Your number that you're going to bid is 50% of the after repair value minus repair costs. So let's say that the taxes owed are $3,000. Let's say this is a Baltimore property. Taxes owed are $3,000. After repair value is 220. So let's take out your calculator. Take out your calculator real quick. Take out your calculator. So in our calculator, we see this property, taxes owed are $3,000. We're going to put in the after repair value of 220. And then we're going to multiply that by 50%, right? We get 110. And then we're going to subtract that 110 by $50,000 repair costs. And $60,000 is our price that we're going to bid. We're going to bid 60,000 on this property that the ARV is 220,000. I'm suggesting that when you bid, you're bidding somewhere between $20,000 and $50,000 of the after repair value minus repair costs, as opposed to what we normally do is 70% on the tax auction, because you want to win. You want to get a good deal. So 50 cents on the dollar minus repair costs, or somewhere between 20 and 50. And so in this case, you're going to bid 60, which means and let's just say you win, you put up the three, the other 57 is not due, is due sometime between a year and 2 years from now. So even if you don't have the rest of the money, you don't even need it until a year or two from now. They give you 2 years to close. And in this case, on a Baltimore property, you can make close to $100,000 on a flip. Now, the same numbers, let's say if it was DC, and if it was comparison numbers, um, let's just say ARV is 800. So 800 times 50 is 400 minus, let's say 800, let's just say $100,000 in repair costs. So you're buying a property for 300,000. If you win the bid, you're buying it for 300,000, and ARV is 800,000. So in that case, on that property, you're going to be making uh, over $300,000. Eight times 432, $320,000. If with those numbers I just gave you in DC. So sizable profits, sizable profits. But you've got to know how to bid, and you've got to be realistic with your bids. Knowing it's a competition, knowing if you get able to buy a property at 50% of after repair value minus repair costs in bigger numbers, PG County and DC, you know, you're making great money. DC, like I said, if it's a Petworth property, you're making over 300,000. That includes repair costs, everything. You're walking away with over 300,000. Any questions here on bidding?
Yeah, Greg, based on the scenario, you said that the $3,000, which is your amount that you put down for the tax to get the tax certificate. But then you said once we go through the redemption process, we only have to come up with the 57,000. That
Right.
means that $3,000 is being used also as a kind of what, down payment?
Yeah. And so you got to pay the taxes.
Right.
You win the bid, and you win the bid at 60. So you win the bid at 60. Yeah, you've already put up three. So now you only owe 57.
Also, putting money up also counts towards your final balance if you end up winning and purchasing the property.
Yeah.
Okay, got you.
Hey, Greg,
Yes, ma'am.
the tax auction is different from a live auction like Jay Billick, correct?
Um, yes.
So
Mhm.
my understanding, my limited understanding, and if you can tell, how do you like you're saying that the most you want to bid is 60,000, but if it's not a live bid where you can like you have to put up that 60,000 before the auction starts, right?
You mean with AJ Billig?
No, with the tax.
No, no, no. If you win the bid, you're only putting up the outstanding. Let me give you an example. The outstanding taxes.
I
So,
understand that, but
oh,
that
okay.
60,000, like if there's a bidding going on and you don't, to my understanding, you as a participant, you don't know what the win, like the last person, like the person you're bidding against may have stopped at $30,000,
Right.
but you have put up 60,000. Is there a way that you can save yourself that extra $29,000?
No, no. You just shoot your best shot.
Gotcha. Okay.
Whether you're 20,000 ahead, 30,000, you just shoot your best shot. But
Mhm.
here's the thing. Let's say that you bid 60,000 and you didn't know this, but somebody bid 30,000 and you won by 30,000. It's okay. Look what great deal you're getting. And these are smaller numbers. But let's say, like I said, the one in DC with ARV of 800,000, you're going to make over 300,000 on one property. You with me? So I'm not worried about how much I won by. All I'm worried about is how much money I'm getting ready to make. You with me?
True. Absolutely makes sense.
And Greg, excuse me, that that 60,000, you don't have to put it up until the property is gone into foreclosure after the redemption period is over, right?
Right. Well,
So you, or
well, after the redemption period and after you foreclose.
right. So you have some time, maybe a year, maybe 2 years in Baltimore.
2 years, yeah.
Okay, great.
All right,
Hey
here's the
Greg, I have a question about this auction process too. I was just curious, could you, I mean, I have never experienced this. I've only ever done like an online auction. And so I'm just curious, everybody, when you're in a live
Did we
auction,
lock that door?
everybody submits
Yeah.
their bid at the same time. That's how that process works. I mean, how does it work when you're live? Like, if you could just share a little bit.
Yeah, it's just like that. They do them in batches, and you know when yours property that you want to bid is coming up, and then you shoot your best shot, and then they tell you who won.
And so it's not like a Sotheby's auction where there's a bidding and an escalation.
No. Mm-mm.
Okay.
I have a question, Greg. You muted me. I was getting ready to question.
Oh, go ahead, Marlene.
Now I'm trying to understand the difference here, the tax lien and tax deed. I heard the
Well,
tax deed is better, but the tax lien, once you pay it off, it's still yours, right? Once they don't redeem and they're
on,
going to foreclosure, it's still your house, right? So what's the I mean, why does it matter with the tax lien versus a tax deed if you're producing the same results?
so half of the country is a tax deed state, and the other half are tax lien states. So we're in tax lien states. What a tax lien what happens in a tax lien state like Maryland, DC, is when you're bidding, but you're not bidding to buy the house. You're bidding to win the certificate. And then
Oh,
once you win the certificate, now you go through the redemption period, and if they don't redeem, now you have the right to foreclose on them to then get the house. In a tax deed state, when you win the bid, you actually win the house.
oh,
You still go through the redemption period, but once you go through the redemption period, house is yours. I mean, you got to go to closing and
mm,
all that, but there's no foreclosing in the tax deed state.
okay,
So you're bidding for the house in a tax deed state. In a tax lien state, you're bidding for the tax lien.
okay.
And once
I
you win the certificate, once you win the certificate, you basically have what's called an equitable right to the property.
hmm
Once you get through redemption, now you can foreclose on them. In the tax deed state, there's no foreclosure.
Okay. Okay, that's the difference.
So
Okay, thank you.
a lot of investors who invest in tax foreclosures, their preference is tax deed states. And a lot of investors, it's since it's online, they bid on properties out of state. They find someone boots on the ground, go check out these properties, and they bid because they know that once they win, they actually win the house after redemption. So that's the difference.
All right, thanks, Greg.
So here's the truth. Most investors never take advantage of tax foreclosure auctions. It's not because the deals aren't there, it's because they don't understand. They don't understand the process, how tax foreclosure auctions actually work from start to finish, the risk, what pitfalls to avoid, how to protect yourself at an auction. So there's no risk. There's absolutely no risk. If you win the bid, let's say it's in Prince George's County, if you win the bid and they redeem, you don't get the property, but you get your money back plus 20% interest. There's no risk. You don't lose. And then of course, if they don't redeem, then you get the house. So there's really no risk. And what a lot of people do, and I think we talked about this last week, what a lot of people, a lot of not people, but a lot of like hedge funds, they could care less if they win or not. They're parking their money to get 20% because it's hard to get 20% in like, the stock market. Some ETFs, you can get over 20% a year. Um, some blue chip stocks, but even blue chip, between 10 and 15%, which is good, but tax foreclosure is better. It's 20% and sometimes 24%. And so some people just park their money, bid on a whole bunch of properties, cross their fingers and hope they lose because they want the interest on their money. And then I think we've already talked about how to analyze these deals, how to evaluate properties, true value before placing the single bid. And if you stick to the formula that I just talked about, you're good. I think that you'll win, and there's a lot of cushion in there. There's a lot of cushion. We cushion that thing because you're buying it at 50%, 50 cents on the dollar, in my opinion. You can go lower if you want. 50 cents on the dollar minus repair costs. In most cases, you're going to win. You're going to win and you're going to get a great deal. And then the other thing is, we're going to do after repair value times 50%. After repair value, say a year from now or 2 years from now, is going to be even higher, which means you're going to make even more money. And so I would stick to that formula. This is where opportunity is, knowledge, consistency, and there's lots of opportunities. We got Baltimore here, you guys, but is opportunities all over. Can you imagine, let's just say again, a property in DC, for example. And DC auction is in July. List isn't out yet. I don't even know if the date is out yet, but it's always in July. And let's say you even take a property in Deanwood. And let's say it's a property in Deanwood. Akia just got her property um, appraised at, I think she said 525 or 510 or something. Some of you guys seen her property in DC, but let's just say 500. So let's say ARV is 500 times 50% minus, let's just say $100,000 it needs. So you're going to bid 150. So you'd bid 150 for a house with the after repair value of $500,000. And then on this one, you should be making about 40% should be profit. So 40% of 500,000 is 200,000. You should be making $200,000 on that property in Deanwood. 200,000. And if you if and again the rules are the same, you can keep that property for 2 years before you close on it, which could be a strategy. Because now you can put up the money for the taxes, not pay the rest of the money. In this case was 150 for 2 years. But guess what happens in 2 years in Deanwood? That 500,000 goes to, let's just be conservative and say 550 or 575. Now you made 275. That's tax foreclosure auctions. And so as a strategy, you guys, what I would do is throughout the year, I would still buy and hold whatever your goals are, buy and hold, wholesale, flip, but save some money, at least enough money to pay off taxes because you've got a year or two to come up with the rest of the money. Now, if you put, let's say you win, if you put the buyer's name in an LLC, put the buyer's name in an LLC. Let's say in a year you don't want the deal. Now you wholesale that deal. Have me or somebody else take over the LLC, and now it's my deal, and then I pay you a handsome wholesale fee. And that's how you wholesale these properties. So now you can wholesale. You put it under contract, now you can wholesale it. Does that make sense? Any questions here, you guys?
Yeah, I have a question.
Go ahead, Marlene.
Okay, so if you win the bid and you're paying the back taxes, um, and the person has a 9-month redemption period, are they going to be responsible to pay the taxes for that particular year as well? Because I mean, they got to pay taxes annually, or are we responsible because we paid it?
No, you start paying taxes from the moment you own it for the moment you close on it.
So they're still responsible to pay the next year's taxes if the 9 months rolls into a new year. They got to pay that in addition to the back taxes, correct, Greg?
No, they pay the back taxes. Let's say that they have, I don't know, I can't remember if DC, I think it is, but I'm not sure. DC redemption period is either 6 months or 9 months. I know Baltimore for residential properties is 9 months. I can't remember if it's 9 months in DC or not. I've got it here in my notes. But let's just say it's 6 months. So they have to pay their back taxes
Uh-huh.
plus interest. So let's say they pay the back taxes in a 6 month. So even
Right.
that period, they've got to pay the taxes from there. But let's say that they don't pay the taxes during the redemption period. Now, whoever won the bid pays the taxes and then buys the property.
So you're saying if they owe back taxes, let's say 3 years or 2 years, and this is 2025, we're going into a new tax year, 2026, we got to pay the taxes for 2025. So we have to pay that, is what you're saying, because we won the bid, right?
If you win the bid, yeah, absolutely.
Okay, so we're
Absolutely.
actually paying more than what we were, more than what we're getting from the house. Like if they owe $2,000 and they got to pay another 22, let's say every year the tax go up another 2,200 for the following year, we're actually paying double. And then the interest is going on both of them, and then they will give it back to us if they don't pay those back. I'm just trying to understand that because we pay property taxes annually. So I'm just trying to
Start.
understand.
So you're talking from the perspective of the homeowner? Is that what you're saying?
Yeah, the homeowner that has they're in the redemption period to pay
Okay,
back
so let's say
the
they
taxes.
they owe $2,000 in back taxes.
Right. And then they got a new tax year coming. They got to pay property taxes for that year as well.
Right.
It's adding up, right? So I'm trying to understand, are they paying it or are we paying it because we won?
They're paying taxes for the period of time that they own the property. And so if they don't pay the back taxes um, during the redemption period, they're gone. And the new owner now they're able to take over the property or close on the property, and they just owe that $2,000. They just owe the 2,000. And then when they go to settlement, let's say that they won the bid at $60,000. They've
Mhm.
already put up the back taxes of 2,000. Now, when they close on it, from the day that they close on the deal, now they start paying taxes from there. In a period of time of the period of time from the auction till we close on it, the city's not getting any tax revenue.
Oh, so it just stops from there?
Mhm.
Oh, okay. Yeah, that's what I wanted to know. I thought maybe they're just adding it on as long as they're in the house, but okay.
Well, yeah. I mean, if they redeem, then yeah, they've got to pay the back taxes plus the interest plus
The property taxes, if they're still, if the
plus
nine
the new
months
tax.
overlaps, if the 9 months carry on to a new year,
They
they
got to pay
still
the
got to
new
pay
tax.
that too, right?
Yeah. That's why a
Okay.
lot of them don't redeem.
That's what I figured because it doesn't make sense. They'll be paying more taxes. Did you see my
Well,
point, Greg?
it makes sense if they have the money because they don't lose the house. So if they have the money, it does make sense. Or you could call them, this big old list. You can call
Uh-huh.
them during the redemption period and say, hey, this is Marlene. I'm a real estate investor. I unfortunately I see your name on the tax foreclosure list. I can help. You know, what do you need? I'd like to buy the property from you. And if they don't have a place to move to, you can help them there. If they don't have the money to redeem, and it makes sense for you to buy the property, let's say they own the property free and clear, but they can't afford the taxes. Now you can really negotiate a great deal and pay off the taxes during the redemption period. And and they never and the person who won the bid, they don't get the property because the back taxes were paid. Hopefully I didn't, did I confuse you?
No, um, I'm just trying to understand the scenario where if we won the bid and we pay their back taxes and they have a, like you said, 9 month, the 9 month could be in the same year or it can overlap between 2 year, that it can carry into a new year, which means property taxes are accruing for that year, but you're saying it stops. But I
Yeah,
figure if they're still living in there, the city is still asking for money for that year, still on top of what they owe, on top of interest.
if
That's what
they
I'm
stay,
thinking in my
if they,
mind.
yeah, if they stay there, but if they don't owe. They get foreclosed on.
Oh, okay.
Marcia, did you have a question?
Yes. Hi, Greg. I was wondering, so after the redemption period, you win the bid, you pay the taxes. Well, wait for the redemption period to expire, and then you pay the taxes. What happens to all of the other liens on the property? The mortgage, any mechanics liens, any, child support liens, whatever liens that are on the property. Do those get erased?
They all get erased except for if there's a federal lien on the property.
Okay.
And the
Everything,
water.
um,
I was told the water also.
maybe the water. I don't think the water though, Valerie, because the water could be just as much as the tax lien. I don't think the water, but maybe I'll look at that. But I think it's just any federal liens. I don't think it's the water though.
Mm-hmm.
I've seen water bills $2,000 and $3,000. So I don't no, it's definitely not the water.
No, they don't waive the water.
They don't waive it?
Right. You
Right.
don't, which means you don't owe a water bill, right? The back water bill?
No, in actuality, you would.
No, the city's going to forgive you of that. The city will forgive you of that. They control that. They control, so the city controls all of that. And so they're going to forgive you or forgive them of that. And any type of city lien, they waive all of that. The only thing you've got to worry about is the federal lien, not the water. The water is controlled by the city. The taxes are controlled by the city. The city's going to waive everything, any kind of lien that they have, because they want to get the property taxes, and so they're going to waive everything. The only thing that it's hard to get off is anything federal.
Hey, Greg,
Yes.
I did just pull it up. And if I asked it correctly, I asked, is the water lien forgiven in a tax sale? AI came back saying no. A water lien is generally not forgiven or wiped out in a tax sale.
Okay. We'll go with AI,
It
but
does say instead, the water lien, along with other municipal liens like property taxes, is typically sold to a third party investor. So apparently that goes along with the buyer. Did I understand that correctly?
yeah, we can talk about that offline. I don't think anything I we can talk about that offline. The only thing you got to worry about is federal liens. The city's gonna forgive everything because they want that tax base. They want that tax money. And they don't want a water lien or anything else getting in the way of that. So anything that the city or the county can control, they're going to forgive. The way the cities really make their money is through people paying their property taxes. So there are because water bills, as you know, as I personally know, with tenants not paying, like I said, could be just as high as the tax lien. But we'll discuss that. We can discuss that.
So when you're saying federal liens, that's IRS.
Taxes, yeah.
Okay.
Hmm.
So, Greg, will we know that before we enter the auction with liens, additional liens are on the property, or we just take a risk and we don't know it till after the fact?
You can have a title company. Once you win the bid, you can have a title company do a title search for you. And just keep in mind, you're never going to lose. If there's a federal lien on the property, then you'll get your money back. They're not going to
Okay.
make you close if there's a federal lien. Because if the federal lien's like the IRS, that ain't going nowhere. IRS wants their money, unfortunately. All right, any other questions, you guys?
Greg, what kind of money do you have to come with for the tax auction?
You're just coming up with so in a tax auction, you see it, where is it at? Amount due right here. You see amount due?
Mm-hmm.
These are Baltimore properties. And so for this particular property, you've got to come up with 2,236. For this property, 1,962. With this property, $2,311, and so on and so forth. But this is Baltimore. And so
So
this
you
is
just come with the, so is this in person or is it online? The one on the 18th?
it's online.
Online, okay.
Yeah. And so this is the amount you pay at the auction if you win.
Mm-hmm. Okay.
And then, but you're going to bid higher. And
Mm-hmm.
so the rest of the money you're going to pay later.
Okay. And is the DC tax auction online as well?
Yes.
Okay. Because if I am not mistaken, I think Virginia is in person.
I don't,
You know,
I'm not,
you-
I'm not
oh,
sure.
okay.
I know Virginia is a tax deed state.
Mm-hmm.
A lot of people bid because you can get your property sooner. It's
Yeah.
an easier process in a tax deed state.
Okay.
So real quickly, Greg, on this. Um, so you could bypass all this if you pull the list that you said, you see the liens, and maybe negotiate something with a seller like a credit financing situation where you agree to pay the liens, but then the property and stuff become yours. Can you do that or no?
Yeah.
Do a
So for
sub to or a seller finance if you agree to pay the liens or I guess any liens on the property if you're going to assume that, but then the house will become yours, but you can make an agreement with the seller saying that if I pay all this, you deed me the house. Um, or you can pay, you pay the mortgage to me because I'll be the bank. Or I'm just wondering, how does that look like? Maybe I'm saying it wrong.
I think it's all the above. I think it's everything that you said. So you can knock on this person's door right here
Uh-huh.
and say, I'm a real estate investor. I see that you owe 2,236. Property, as you probably already know, property is going up for auction on the 18th. I want you to know that you've got an addition after the 18th, you got an additional 9 months. I wanted to know if you might be interested in selling the property now. And then
Okay.
depending on the terms, then now you can negotiate with them.
Okay. I was just wondering if that
And
was
you can buy
something
it during the redemption period.
during the redemption.
Now they're going to owe more than this. They're going to owe, so they redeem, there's interest that they've got to pay
Oh,
also. So you're
yeah.
going to have to pay that. But let's say in this property, let's just say, because this is saying the ARV is 341. I don't think it's that high, but this is saying it's 341. Here are the comps right here.
Okay.
Do have some in the 300s there. But let's just say it is 341, the ARV, and the rents are 2,200 a month. I mean, you probably could honestly negotiate a really good deal with them during the redemption period, or even before it goes to auction. The
Right.
smarter move is to try to get it before it goes to auction because now you don't
Right.
have to pay the interest. Or
Right.
penalties. So yeah,
Greg, what
you're
does that conversation sound like? So you said you could probably negotiate a really good deal with them. What would that conversation sound like? Like, can you do like a mock conversation with
yeah,
them?
just like I just said, we and Saturday it might rain. Hopefully it doesn't, but we might just knock on some doors on Saturday because we're going to look at a list of property. We might even look at this one, and there's a certain percentage of properties that the owners still live there. And you say, I'm a real estate investor. I see that your property is on a tax foreclosure list. And you might even want to show them the list. I see that you owe some back taxes. I'm interested in purchasing your property or
Mm-hmm.
making you a cash offer. I will pay
Mm-hmm.
off, I will pay off the taxes and pay you money.
How much
Honestly,
money are we offering them?
it just depends. I mean, we might
What's it
we
depend
might
on?
just we might just it depends on what they owe and all that
Uh-huh.
kind of stuff. So it just depends. I mean, we would probably offer somewhere between 70. I would think if you could see the house to see what the repairs are, uh,
Mm-hmm.
somewhere between 50, I would say somewhere between 50 and 60% of that repair value minus repair costs. Because
Mm-hmm.
you lessen your risk because you're talking to them.
Mm-hmm.
At some point, hopefully they invite you into the property. You can determine what the repair cost is, so it's less risk.
Mm-hmm. Would that be like a quick claim deed or no?
It could be either
Okay.
that or uh,
Or the wholesale deal sheet that we have where you do a wholesale deal?
wholesale it. You could wholesale it.
Okay.
You could
Mm-hmm.
it could
Okay.
be quick claim in that you do that and then pay off the taxes,
Mm-hmm.
and then negotiate paying them the rest of the money.
Mm-hmm.
Want something in writing that shows that you're a part owner of
Intention?
the property.
Mm-hmm. Okay.
Because you just don't want
Okay.
to, because today is the what, the 7th? What's today's date? Yeah, the 7th.
Yeah, today's a Saturday.
We've got 10, 11 days to pay off the taxes before the auction. And so, but we don't want to just give them or go down and pay the taxes if we don't have something in writing, preferably something,
Showing our interest in the property?
our name, yeah, showing some interest
Mm-hmm.
in the property. Because now they
Okay.
lawyer up and now you don't get the property, or you get the property 2 or 3 years from now.
Oh
It's,
wow.
yeah, it could be a quick claim. It could be putting um, the property in a trust with your name in it.
Okay.
Or, I mean, if you've got cash or if you got a hard money lender that can close quickly, you can just go ahead and
Mm-hmm.
close.
Mm-hmm.
But a great
Okay.
strategy is buying the property before it actually gets to the auction block. So
Hey,
Hey,
that'll be
so
Greg, you
Greg,
mentioned something.
I'm
I'm
sorry, go
sorry.
ahead.
No, I was saying, Greg, you said that most of these properties were investors that probably didn't get a chance to
I wouldn't
finish
say
up certain.
most, but I wouldn't say most, but a lot.
Okay, the reason I'm asking that is that majority's properties are probably in a trust. What would that look like in
So,
this situation? We're
well,
talking about
so here,
property taxes. That's going to be in a trust account. Wouldn't it be in a special account?
it's not going to be in a trust. So this one's in an LLC. This property right here
Okay.
is in an LLC. So that's an investor. This property, where am I at? This property, so that's the one this property is in an LLC, so that's an investor. So I wouldn't say the majority, but a lot of these are investors. This is an investor right here. So this property right here is an investor.
But why would they not be in a trust? I don't understand. A land trust. You're saying these properties are not? None of these are? as investors?
Most investors don't put them in trust. They put them in LLCs.
Okay. All right. I'm done. Go on, Kenny.
This one right
Oh,
here,
okay.
there is a high percent. See all these LLCs? This one, this one, this one.
Yeah.
Yep, this one. There's a lot of LLCs. This one. Look, guys. This one. There is a lot of LLCs
And again,
Hmm.
why?
because investors are buying these properties and they can't finish them. They buy them wrong, contractor issues, and they just let them go. And then most of them are using hard money lenders. Hard money lenders are letting them go. Hard money lenders have insurance, so that they're already protected. Plus, in most cases, the hard money lenders, they've gotten their money anyway. They've gotten they've gotten their money anyway. They've got the down payment. Um, maybe they've got monthly payments. They've got their points. Like they've got their money. So that's why.
Hey, Greg.
Hmm.
So you're saying the strategy would be for well, some of these properties would be if the after repair value is 300,000, you offer half of that minus the repair cost. So that'd be 150, and so we're talking about 100,000, right?
To offer, you mean?
Yeah, because you say if
Yeah.
the after repair value is 300,
You mean when you're bidding at the auction?
or if I knock on someone's
Oh
door
yeah. Well, you just got to talk to them and see what the situation.
yeah,
In that case, you do have to pay. You got to bring them. You got to bring the taxes current.
correct,
You are going to have to pay water bill if there's a water bill. Because
right,
this is different. That's not going to get, you know, you've got to pay that. And then there could be a mortgage on the property. You might have to pay that off. There could be a mortgage. You just have to see what's owed.
right. But if it's free and clear, then that changes the scenario altogether because
Yeah, you've got more room to negotiate.
yeah, because I've had a water bill at a rental in Baltimore that was almost 3,000,
Yeah.
and back then they were putting it in there as part of the rent, but you had to have it on your lease. But they've changed that now, so I end up having to pay it.
Yeah.
So I mean, this was years ago. I had to pay that water bill to get it because once the legal folks, the city gets a lien on it. In order to get it out of that, I had to pay the water bill and pay the attorneys,
Right.
and it was almost $3,000.
Yeah, I've
So
seen it high.
yeah, okay, thanks.
Hey, Greg, is this the list you said you were going to send to myself and someone else?
Yeah.
Okay, it
I'm
was in the
I'm
email.
I'm
Yeah.
the someone else, Greg.
I
And that's the 2129 21229. Thank you, please.
would like 2-4.
You said 2-9.
I did, but I would like 2-4 if I can get both of those. That'd be great.
I ought to not
But
give you anything. I ought to not give you anything for trying to bust me out in front of the whole world.
Oh, when did I do that?
You just did.
Oh,
Kenny,
oh, about the list?
what's your email address, Kenny?
Kene.
Wait, hold on. Kene. Hold on.
There it
Okay.
is right there. That's me.
And G Marie, what's yours?
G Marie HBS. There it is right there. You know, my name should be at the top. You hit G and it should automatically pop up.
All right. Now she can't bust me out anymore.
I just
Now,
realized where I was busting you out at. I was like, oh, that. Okay.
it's all good. Any other questions
Thank
relating
you.
to the list or anything?
Hey, Greg, I just read that if there's an outstanding water bill on that property,
On what?
it won't on any property.
Oh,
then it won't be extinguished until after you foreclosed on it. You as the investor. So you bid on it, you go through the redemption process, and if there's still an outstanding lien on the water bill, once you foreclose on a property, it's extinguished. But until then,
right,
it still runs with the house.
right. So you don't have to pay it. But
Correct.
if you buy it though, while it's in redemption period, you do have to pay it. But you just count that in the numbers.
Okay.
But if you foreclose on them and you're not paying it. City ain't putting no restrictions. They want you to buy that property so they can get that tax money every
Right.
every 6 months, every year. All right, any other questions here, you guys?
Hey, Greg, one quick question. You gave a site the other evening, last couple of days ago, that can pull comps even if you're not on the MLS. Is it this parcel fair?
No, so the other day we used Prop Stream. G Marie used Prop Stream,
Prop stream?
and I just used
Chat GPT.
ChatGPT.
Yeah, that's right. Okay, okay, great. Thanks.
You guys got some good questions. Any other questions? All right. All right. So what if you could see these in real life? Walk the property, analyze the deals, and learn exactly what you're looking for. And so Saturday, well, starting tomorrow. So tomorrow we've got a webinar. Um, I'm having a 2-day tax foreclosure auction intensive, where tomorrow I'm going to go over a lot of what we just went over actually, and then some. I'm going to go over the properties. We're going to walk. It's going to be more of a walking tour. We're going to analyze the properties. It'll be in Baltimore. I've kind of already found the properties that I want to look at. They're all kind of in walking distance. I have picked a couple properties that are already renovated so we can kind of see what the house will look like after. So I got a couple pit stops we can make. But tomorrow I'm going to go over how auctions work, how to find deals, analyze, avoid mistakes. And then on Saturday, we'll I don't know, take about an hour, hour and a half to look at as many properties as possible. I've got about, I don't know, 10, 11 properties, but we're not going to look at all of them. We'll see how the weather holds up and we'll see how long it takes. But we're going to actually run real numbers. We may even knock on some doors, you guys. We might as well to see if they might be interested in selling before the auction. And so we'll do all of that on Saturday. We'll go to lunch also to kind of debrief, um, take a look at what we saw, what we learned. So we're going to do all that on Saturday. And so this is it's not theory. This is real life. We're going to do all this in real life. We're going to be on the streets of Baltimore and we're going to be looking at real properties that you guys may be interested in actually going to bid on. And so we're just taking a small group. It's filling up. We had about 3 or 4 people sign up just today, like within an hour. So it's filling up. So if you guys are interested, go to bennettbootcamps.com. It is a small investment, but it's well worth it. I mean, we're going to learn more than just the tax foreclosure auctions. I will be there. We'll have a few other people from the coaching program that'll be there to be able to answer questions. We're going to go over financing, how to finance these deals, and as you can tell, there's a bunch of different strategies on buying these properties. And so, if you guys are interested, as an investment, go to bennettbootcamps.com. We'd love to have you. Love for you guys to be a part of this. We start at 2 o'clock tomorrow. I'll go for an hour. I'll answer all your questions. I'll show you the properties that we're going to look at, and we'll take it from there. The deals are out here. I mean, it's up to us to find them, and we're going to find them. Any questions, you guys? You guys asked a lot of great questions. Any
So for
questions?
those of us who, yes, for those of us who can't make it on Saturday, how will we get the instant replay recorded version of Saturday?
I won't have, we're not going to record Saturday. I'll give you the
Hmm.
list of properties that we saw, and I'll give you the cliff notes of it, what we thought about
Okay.
it. I'm gonna document everything.
Yeah. This is a great weekend. It's Mother's Day weekend, so I wish I could be there. I'm really going to, miss going to that one.
No worries. Olivia had a question in the chat. Is it possible to pay the taxes and keep the property from going to auction? Yeah, you can do that. You can pay the taxes, Olivia, from the homeowner, but you're only going to do that if you can negotiate a deal for you to buy the property. That's the only reason you're going to do that is if you can negotiate a deal. You negotiate a deal, you'll save it from going to foreclosure. Any other questions, you guys? That was a good question. Any other question? You guys want me to start speaking in Spanish right now?
No,
What?
but when will you do this type of class again? Will it be tax time next year?
I might do one. I'm excited. I'm excited to see the list for DC, just to see what the opportunities are. In comparison to Baltimore, the numbers are greater. The taxes are going to be much higher, but the profits are going to be crazy. So I'm anxious to see that. And so I might do another class in July.
Greg, I was just going to
Do you
ask you,
have
I
the
wish I could
dates?
go to this one, but will you do this for PG and DC too?
I'll
Your
do
two?
it for DC.
Okay.
PG is actually the 11th. Let me see when the 11th is. I think it's Monday. Yeah, Monday. So PG is actually Monday. But
Oh,
I'll definitely do it for DC.
okay.
And you
Definitely.
said
We'll do a
DC is
walking
in.
we'll do a walking tour for DC. It's in July. The date's not out yet. The list is not out yet.
Okay.
How when do they put that date out? Because I need to be proactive on weekends.
It's normally a month. It's normally at least a month ahead of time.
So I should be looking for it in June.
Correct.
And it's not SDAT. What is it in DC?
The list,
Yeah, where do I get it? Oh, same place that you gave us the list from today?
I don't know. I don't think Parcel Fair has DC. They have a lot of states. I don't think they have DC, but it's public information. I'll get it for you. You can Google it. You can Google
Okay,
Baltimore,
okay,
but
okay.
you can Google the list. It's public information. So we'll do DC. I'm excited about DC. And I mean, like I said, the taxes are going to be a lot higher, but the profits are tremendous. And in DC, with the appreciation, you wait that 2 years, you just gain, in some cases, another $100,000, depending on the property. If you're getting 10% appreciation every year, and that property is this, let's just say ARV is 500,000, I mean, you're going to gain another 100,000 in 2 years. So, all right. Any other questions, you guys?
Um, will we be having contracts with us? Is that necessary?
I do think that's necessary. That's a good question. If you're going to, or if we're going to knock on some doors, yeah, we can negotiate right then and there. I'll definitely have some contracts with me, or I'll bring my laptop and be able to do contracts right on the spot. That's a great question. But the answer is yes. All right. Anything else, you guys? All right. Hope to see some of you guys in the class tomorrow, out in the field on Saturday. That's the best way to learn. Best way I learned in my career was being out in the field, actually touching the properties, seeing the properties, writing, doing the numbers, estimating repair costs, all those kinds of things. All right, you guys. Great class, great questions. Um, let's make this our best year, you guys. Take care. God bless. And I'll talk to you guys soon. Good night, everybody.
Thank
Thank you,
you.
Greg. Good night.
Good
Good night,
night.
everyone.